What's up, everybody? Today we're going to be talking about updates to the American Rescue Plan and what that means for people who already filed their unemployment taxes. Now, I've already made a video before just kind of going over the new benefits, how if you have received unemployment in 2020, how $10,200 of it, if you're single, will be untaxed. And if you're married, it's $20,400. Now, in that video, I told you, if you have already filed your taxes like I did, don't do anything yet. First of all, the new tax forms, the amended forms wouldn't be ready until March 25th, and that I was pretty sure that there was going to be some type of changes, and I was saying to just let all of these tax preparers and all these tax companies just update their systems and to wait until at least the end of the first week of April. So it's nearing the end of the first week of April, and I wanted to give an update. So on March 31st, last Wednesday, the IRS released a statement stating that if you already filed, you don't need to do anything. They came up with a plan to automatically refund everyone. So here's how it'll work. They're going to roll out refunds for single people in the spring, and they're going to roll out the refunds for married couples in the summer. Now, yeah, we're going to probably be waiting quite a while for our refund, but there is nothing you need to do. If you file an amendment, it's just going to delay it even more. It's going to cost you time, and if you pay someone else to do it, it's going to probably cost you money. So just don't do anything. Now, we're on the IRS website right now, and we'll turn to that in a second. But if you haven't filed yet, I told you in my last video, still not do anything, wait to the end, at least the end of the first week of April. And if you go to, like I just left TurboTax's website, and it was just saying that their system still hasn't fully updated yet. So I still encourage you to just kind of wait a little bit, maybe another week, and then you can go ahead and file your taxes. The tax deadline has been extended anyway, so it's no longer April 15th, so you don't have to worry about that. But if you file too early, you'll run into some problems, and your refund will get delayed. Now, while that's all good, there's still going to be some people that need to file amendments, and I want to kind of help those people out right now and help you determine whether you are one of those people. So let's go read and see what the IRS has to say. Now, in all my videos, I always tell you guys, well, I'm doing it now, don't trust YouTubers. Don't trust articles from Bloomberg. Trust the source. Trust the IRS, okay? Now, you can watch us and get ideas and led down the right path, okay? But the thing is, we're not the IRS, and if they change a rule just like before on March 30th, what I'm telling you right now was not accurate. But now what I'm telling you is accurate. So you don't want to get your information from a YouTuber. Not saying that there are people that just don't know what they're doing, because there are. But it's just that things change, laws change all the time. So if you're watching an old video of mine and I tell you something, that might not be factual for today, okay? So you want to always go to the source, take what I tell you, and say, okay, that sounds like a good idea. Let me go to the IRS website to verify that's even still a thing, and then you make your moves based on that, okay? I'm going to have that disclaimer almost every video. So anyway, we're on the IRS website. We see up here it's irs.gov, not irs.com, because that exists. It's not the IRS, okay? You want to make sure it's .gov. .govs mean it's a government website. Let's look at this release here. So it's basically saying, March 31st, 2021, to help taxpayers, the IRS announced today that it will take steps to automatically refund this spring and summer to people who filed their tax return reporting unemployment compensation before the recent changes made by the American Rescue Plan. The legislation signed on March 11th. We already know this. If you made less than $150, you don't have to include or pay taxes on your first $10,200, or if you're married, $20,400. This we already know. Because the change occurred after some people filed their taxes, the IRS will take steps in the spring and summer to make sure the appropriate change to their return. I read that wrong, but to make the appropriate change to their return, which may result in a refund. First refunds are expected to be made in May and will continue into the summer. For those taxpayers who already filed and figured their tax based on the full amount of unemployment compensation, the IRS will determine the correct taxable amount of unemployment compensation and tax. Any resulting overpayment of tax will be either refunded or applied to other outstanding taxes owed. For those who have already filed, this is important because there's still some people that need to file amendments. This is what we're about to get into. The IRS will do these recalculations in 2 phases. Okay, we already covered that. Start with single people and then married people. There is no need for taxpayers to file an amended return unless the calculations make the taxpayer newly eligible for additional federal credits and deductions not already included in the original tax return, i.e. the Earned Income Tax Credit, okay? And the EITC is a huge tax credit, especially if you have kids, all right? And if you make a certain amount, you don't qualify. But with this new deduction here, because that's basically what this is going to be for people who already filed, it's going to be a deduction against your income. It may have dropped you down into a tax bracket or an income within the income limitations to allow you to receive an Earned Income Tax Credit. If you are one of those people, you need to file an amendment, and it tells you right here. For example, the IRS can adjust returns for those taxpayers who claimed the EITC. So if you claimed it already when you filed, you don't have to do anything. They'll just readjust it, recalculate it, and then they'll send you your refund. Because the exclusion changed the income level, may now be eligible for an increase in the EITC amount, which may result in a larger refund. However, taxpayers would have to file an amended return if they did not originally claim the EITC or other credits, but now are eligible because the exclusion changed their income. Now we see again, we're on the irs.gov website, and we can look right here and we see the table. And it says find the maximum AGI, adjusted gross income, investment income and credits amount for tax year 2020, and you just go through this chart. Now, if you now qualify, and what you do is take your unemployment income and deduct that from what your taxes already said. So if you made $50,000, but you had got, over $10,000, and you got over $10,200 in unemployment income, you would subtract $10,200 from $50,000, and now it leaves you what, at $39,800. So now you come here and you say, oh, I have 2 kids, and now I'm here. I'm under this 47. Now you qualify for Earned Income Tax Credit. But before getting 50, you did it. Okay, so you want to just look through this chart. None of us can really help you. Your tax preparer can, but I don't know your situation. So you got to come to this chart, and I'll leave links to all this stuff in the description. Come to this chart, figure out your current situation. Now, I want to address state taxes. So here we see they just got a quick one-liner. These taxpayers may want to review their state tax returns as well. That's all they got to say, because the IRS is federal taxes. You have to deal with your state. So what I did, I brought up a site here that'll tell you whether your unemployment benefits are taxed in your state, because states like Virginia, for example, they just don't tax unemployment benefits anyway. So it had nothing to do with the American Rescue Plan. They just don't do it. And most states are like that, but there are some that are not. So you want to check your state. This has all 51 states and provinces. So you go all through here, you look here. The easiest way to do it is to just say, hey, I live in, do a search and say Florida and hit enter. There we go. It takes us to Florida, or was already there. I don't know. And then, boom, you see it says there are no taxes on unemployment benefits in Florida. This website is really slow because it's a lot going on. Now, if you notice, this is Kiplinger.com. Now, Kiplinger is a good financial magazine, but we're not going to take their word, okay? I just told y'all that. Don't take articles, don't take YouTubers, don't take our word. You need to go to your state government's website and verify this. So now we'll say, okay, Florida, we're going to pull up a new tab. I mean, maybe it's my computer running slow. And we'll say Florida, or we could just say, is unemployment taxable in Florida? I spelled Florida wrong, but y'all get what it understood. So we're going to scroll down and we're going to look. Not at Florida. Well, this is the Florida Department of Revenue. And it's a .com. Sometimes they are .coms. Usually they're a .gov. So like if I say, is unemployment taxable in, let's just say, I don't know, Georgia. See, the DOL Georgia.gov. So we will go there, and then we know for real we're at this website, and it'll tell you, learn about unemployment taxes and benefits. I'm gonna leave that to y'all. Y'all gotta go through and read it. Call somebody if you need to. This is pretty much it. So I just wanted to update you guys on what to do with that. Most people don't need to do anything, but for those of you that didn't qualify for the Earned Income Credit before, you just might qualify now, so you want to double check that and make sure. And if you also live in one of these states where unemployment benefits are taxed, you know, you might need to check that out as well, because you might have to file a state amendment. But anyway, with that said, you guys, I'm out. I'm done. Hopefully this was helpful, and I'll see you guys next time.